Listen. 90% of retail traders lose money. Most of them will never understand why. Right now, somewhere in the city of London, 40 floors above the street, 3 monitors glow in a dark room. Golden candlesticks flicker on a Bitcoin chart. At this exact moment, millions of retail traders around the world are staring at the same screen. They are drawing trend lines. They are watching indicators. They are hoping, praying for a breakout. But the market does not care about prayers. The market is not a chart. It is an auction. A cold, ruthless auction where the highest bidder wins, and everyone else pays the price. Here is something most traders never consider. Exposed to a 50-50 coin flip, the human brain will still find a pattern that does not exist. It will create stories where there is only noise. And that instinct is exactly what the market exploits. The era of the intuitive trader is over. It did not end with a dramatic crash. It ended quietly, with a click. Picture: a data center in New Jersey. Miles of fiber optic cables. Servers humming in cold, sterile air. No humans. Just machines, processing 1 million trades per second. This is where gut feelings go to die. Most retail traders still believe they are playing a game of skill. They study candlestick patterns from books written in the 1990s. They memorize formations with names like head and shoulders, or double bottom. But here is what they do not understand. The market they are trading today is not the market those books described. Today's market is a digital predator. It processes more information in 1 second than a human brain can process in an entire trading session. When a retail trader sees a head and shoulders pattern and places a sell order, the institutional algorithms have already mapped every stop loss in that price zone. They know exactly where the exits are. So the price spikes. It triggers the stop losses. It wipes out the retail positions. And then it reverses and moves in the original direction. This is not a conspiracy theory. It is just infrastructure. Let us talk about the human brain for a moment. Daniel Kahneman won a Nobel Prize proving that humans are predictably irrational with money. Not sometimes, predictably. Every single time. When a trader is down $800, something happens in the brain. The amygdala activates. Stress hormones flood the system. Suddenly, the stop-loss strategy that seemed so logical feels impossible to execute. The brain wants revenge. It wants to make it back, right now. This is called loss aversion. And it is the reason most traders hold their losers too long and sell their winners too early. There is another problem: decision fatigue. After making roughly 300 decisions, the human brain starts taking shortcuts. Bad shortcuts. A trader who wakes up at 5 in the morning to catch the London Open. By noon, they are not the same trader. They are tired. They are emotional. They are vulnerable. Meanwhile, the algorithms never sleep. They do not get angry. They do not revenge trade. They do not feel the pain of a losing position. They just execute. So the question becomes, how does a human compete with that? The answer is simple. Do not compete. Adapt. Think about that for a moment. The goal is not to become a machine. That is impossible. The goal is to remove the human weaknesses from the trading process while keeping the human strengths: pattern recognition, strategic thinking, adaptability. These are things humans still do better than algorithms. But staring at charts for 9 hours, watching every tick, making decisions at 2 in the morning when exhausted, that is not a human strength. That is self-sabotage. And deep down, most traders already know this. The smart traders figured this out years ago. They stopped trying to out-trade the machines. They started using the machines as tools. This is where charting platforms change everything. And this is the part most people miss. 20 years ago, professional grade market analysis required a Bloomberg terminal. That meant a 6-figure budget and a Wall Street address. Today, retail traders have access to the same quality of data visualization and analysis tools for less than the cost of a streaming subscription. That is the real revolution. Not artificial intelligence trading accounts. Not magical algorithms. Access to information. A proper charting platform does 3 critical things. First, it organizes overwhelming amounts of data into clean, digestible visuals. No noise. Just signal. Second, it allows traders to set rule-based alerts. Instead of watching charts all day, the system watches for them. It only notifies when specific conditions are met. Third, and this is crucial, it removes the need for constant vigilance. Less screen time means less fatigue. Less fatigue means fewer emotional mistakes. It is a simple equation, but most traders ignore it. Platforms like TradingView have become the industry standard for this reason. The charting is powerful. Custom indicators. Multi-time frame analysis. Alerts that trigger on precise conditions. The trader defines the rules. The platform watches. The human decides. Notice what is not happening here. The software is not making the trade. It is supporting the human decision by eliminating the noise that leads to bad decisions. That is not automation. That is leverage. Now, a reality check. Because this part matters. No tool guarantees profits. Anyone who tells a different story is selling something or lying. Charting platforms do not make traders profitable. What they do, if used correctly, is remove some of the friction between a trader and good decisions. That is it. That is the whole value proposition. Nothing more, nothing less. A trader with a clear strategy, good risk management, and emotional discipline will become more efficient with these tools. A trader with no strategy, no plan, and no discipline will just lose money faster. With better graphics. Tools are amplifiers. They amplify whatever is brought to them. So the question is not which platform to use. The question is, what is the strategy that the platform will execute? And only you can answer that. The market will keep moving. The algorithms will keep running. The only variable left is you. If this made you think differently, subscribe. New insights drop every week. See you in the next one.